Hey, imagine paying off your mortgage when your grandchildren are still in college. Now, this is not science fiction. What we're talking about here is the 50-year mortgage. Now, some people think that this is the answer to the affordability challenge that we're having in housing right now in the United States, and some feel like it's actually gonna handcuff you as a home buyer or as a homeowner. Hey everyone, if we haven't met yet, my name is Troy Sage, local North Dallas, Texas realtor, and I'm dedicated to doing real estate differently, meaning I'm not going to give you any fluff. You're not going to get a bunch of massive opinion. I'm definitely not AI, and you're definitely not going to be steered because no one's paying me to put these videos out. In this video, I am going to tell you the pros and the cons of what I'm seeing on the data in regards to a 50-year mortgage. So let's dive in. So here's the deal. A 50-year mortgage is exactly what it's saying. It is payments over 600 months to pay off your mortgage payment. Now, some say this is going to actually help the affordability situation that we're having in housing, which would bring more buyers to the table and help them have lower mortgage payments. But is it a blessing or is it a curse? Because having 600 months or 50 years to pay off a mortgage has some serious cons to it. So the first con is this: a 50-year mortgage will take you so long to pay off, which also means that it's going to take much longer to establish equity in the property if it's taking you so long to pay this off. Anyone that owns a home or anyone that's done any research on mortgages know that it's usually the first half of your mortgage term, whether it's 15 or 30 years, is you're paying off mainly interest first and then the principal later. So on a 50-year mortgage, you're not going to see any relief for at least 15 to 20 years. Yes, you're going to pay off some equity, but it's not going to be in big chunks. So the pro is if you're looking to buy a home, your mortgage payments are going to be less if the interest rate is at the going rate. And we don't even know what that is right now. The interest rate could be something totally different. Remember, there's just talk about a 50-year mortgage. There's no 50-year mortgage that's currently in place. So think of it like this. If I have 50 years to pay off a mortgage and my current interest rate is at 7%, it's going to take me 20 years or maybe a little less, maybe a little bit more to start really seeing big chunks of the principal come off. Now, what does that mean? That means as a homeowner, it's going to take me longer to be able to sell that property. So if you're going to buy a home and you say, I've got a 10-year plan to be in this property or a 15-year plan to be in this property, it might be exactly what you need to actually get into a home at an affordable monthly payment. Now, here are some other things to think about. On a 50-year mortgage, it's going to be much harder for you as a homeowner to actually refinance your property unless the market is skyrocketing up. Personally, I haven't seen that except for during the unicorn years where properties were accumulating more value month after month after month. Now, we still do see appreciation on an average every single year, but it's not in big chunks like we had seen in the past. So let's talk about the fact that if the 50-year mortgage is put in place, you will have the ability to afford more home or at least get into buying a home, but it's going to take you much longer to actually pay that mortgage off. So have a game plan to actually be in that property, I would say for a minimum of 10 years. Now, let's touch a little bit more on this affordability. If you can get into a home for $300 to $500 a month below where the rates are right now, of course it's going to make it more affordable, and it's of course going to free up more money for you to spend on other things, essentials like food and utilities and whatever else is essential to you. So it is a good idea. Just keep in mind it's going to take you longer to pay off that mortgage note. So find a home that you're going to be comfortable in, because you're just not going to have enough equity if you make your minimum monthly payments every month to be able to sell that home right away. And a lot of people are used to that. 3 to 5 years are selling their home. Some are breaking even, some are making some money. So this 50-year mortgage is going to slow down your actual building of equity. So it is a good program to get people into a property. You just have to have the proper game plan. So that being said, it does make it more affordable for you to get into a home right away. You're just not going to build as much equity very quickly. Now, one thing that they haven't really discussed or made very clear is what is the interest rate going to be on a 50-year mortgage. Traditionally, a 15-year mortgage and a 30-year mortgage, the 15-year mortgage, the interest rate is just a little bit higher. So it works out for the bank to actually get their money back in 15 years that they're projected to make on that loan. In comparison to a 30-year note, obviously the rate's going to be a little bit higher because it's going to take longer for the bank to get their money back. The question becomes, if there is a 50-year mortgage currently available, if they make one available, then will the interest rate be the same or will it be higher than the 30-year rate right now? Now, history shows that rates are always higher the longer it takes you to pay off your loan because you're at higher risk of defaulting or not paying the money back. I'm going to guess that the interest rates are going to be very close to where the 30-year note is right now in order to make the properties affordable. That is the main focus in the country right now, is how do we make homes more affordable on a monthly basis so that people can get into owning their own home. And this is what shifted in the past 20 years, is that it used to be the focus was, what's it going to cost to buy a home? What's it going to cost by the time I'm totally done paying off that note? And is it worth it to me to be in a home for X amount of years and pay all this interest? The market and the mindset of consumers has shifted a lot, and it's really come down to what is the affordability every single month. And I don't agree or disagree with the mindset, because you're going to have to pay for housing no matter where you're at, unless you're sleeping in mom and dad's basement and they're not charging you anything. And there are some people that do that, but it's not the most comfortable thing when you're living life and getting married and having kids. So, sorry, I digress. Let me get back to my point. And that is, what does it cost to live every single month? If this 50-year mortgage is going to make things more affordable, then that's fantastic for you as a home buyer, that you can actually get into owning a home. And that's fantastic even for people that are going to look for a second home, or they need a property, a vacation home, or so on and so forth. So I think the 50-year note is a good idea. It just needs very strategic planning, just like a 30 or 15-year note. You just really have to have a solid game plan of what you're going to do. Now, let's talk about a con to this 50-year note. Because you're paying off the mortgage at a much slower rate, if the mortgage does take a dip, if the market does take a dip, then you're not going to have any equity and could be facing a negative equity position much quicker than if you're on a 15 or a 30-year mortgage. And again, the reason is because you're paying off such a tiny, tiny amount of the principal every single month. So again, there's pros and cons of this whole 50-year mortgage idea. I guess my question to you is this, is what do you think about this 50-year mortgage? Do you think it's a good idea to help people get into a property so they have ownership, they have the ability to generate equity or create equity by living in the property? And most importantly, it's affordable? Or do you think this is a horrible idea? Do you think this is going to handcuff more people to be in a home longer, and the interest that's being paid back to the bank is still breaking people's personal savings accounts? So what are your thoughts behind this? Do you think it's a good idea, or do you think it's a bad idea? Let me know in the comments below. Now let's talk about the impact of this in the real estate market. So right now in North Dallas, Texas, and across the country, we have way more inventory than we've seen in a long time. We're also looking at a very slow sales market. We're predicted to close across the country a little bit over or under, they play the over-under game, over or under 4 million homes nationwide. An average year is about 5 million homes. So as you can see, for real estate agents and for home sellers and for home buyers, but agents and for sellers, it's very slow with our days on market being so long and prices staying stagnant and even dipping a little bit. So what could this do to the real estate market in the event that they do a 50-year mortgage and there's more buyers that can afford to buy a home right now? Well, it's good news for sellers because it's going to increase the number of people looking at properties. The fear is that it's going to push prices up even higher, and eventually what it will do is it's going to balance itself out like markets always do, to say, okay, we have this big boom where buyers are buying homes, and then all of a sudden prices go so high those same buyers can't afford the home anymore. We saw this in 2020, 21, 22, and even in 23. We saw this happen, and it pushed buyers out. So this could be a great thing, or it could be horrible. depending on where you're at in the real estate sector. If you're a homeowner, it's going to be a great thing. If you're a first-time home buyer, it could be a great thing. If you're somewhere in the middle of those, it could be good or it could be bad. Again, what are your thoughts on this? Because this is just an idea that's being thrown out there, and it may come to fruition, but we don't know yet. What are your thoughts behind this 50-year mortgage in regards to what it could do to our current real estate market? Do you think the prices are going to go up? Do you think more buyers are going to actually come to the table and start outbidding each other again? What are your thoughts? Let me know in the comments. So what is the big picture? And people are talking about this 50-year mortgage right now, and let's kind of wrap things up in what we've learned so far. So number one, it would make homes more affordable. So anyone looking to buy a home, if they did a 50-year mortgage, their monthly mortgage payments would be less, but the long-term damage could be is that they're paying 4 or 5 times what the home is actually worth if they don't pay off their mortgage early. Now, there's a way to strategize behind this to pay off the mortgage much earlier. If you want to know that strategy, leave a comment or reach out to me. The other side of this 50-year mortgage is that what we could see is we could see prices drastically increase, which would not be good. It would be counterproductive to having a loan available for individuals to get into their very first home. So it could make prices go way up. So what is the solution? Well, I have sold hundreds and hundreds of homes, and in my 20 years plus experience, what I've seen that is going to really help our industry and help the American public buy a home is to have high quality homes available. And we need more of those high quality homes available, and we need builders to sell these properties at a realistic number. I'm not saying that builders aren't being realistic, but remember, builders have boards of directors to go to and a profit margin that they have to hit. So I would like to see homes become a little bit more affordable. Don't know if that's real or not. I don't know. Let me know your thoughts on that. I could be just dreaming. And second, sellers have to realize that when you're reselling a home, whether it's a year old or 20 years old, the odds of your home being of equal value as new construction are pretty low. The unicorn years are over where everyone was getting more than what their property was worth. That is not how the market is working today. So we need more affordable homes, and we need realistic loans to be available for home buyers. What I mean by this is they've made the ratios so huge for people to buy homes that you can spend up to almost half of your monthly income on a mortgage payment. And that sounds exciting for a lot of buyers, but it's not recommended by me at any point in time to be spending half of your income to buy a home. The old ratios used to be 28-36, 28% for your mortgage payment, 36% for your mortgage payment, all of your outstanding debt for each month, car payments, credit cards, etc. Understanding times have changed and they've increased those ratios. But what I'm seeing happening is we have some home buyers getting to a home, everything is going good, and then within a year to 3 years, let's say there's a hiccup, somebody loses a job or somebody has a health issue and they can no longer afford their home. So I think by bringing the ratios back is going to help buyers understand that there is a safety net built in here, not only for the bank, but for you, that if you can only pay so much out of your monthly income for a house, that is also helping you. So bottom line is I think we need more homes at affordable pricing, and I truly believe that the lending regulations have to tighten up a little bit more so that those that truly can't afford today can save and afford more in the future. Hey, if you want to know the difference in payments on a 15, 30, or 40 year, or even a 50-year mortgage, and you would like me to run a scenario for you, feel free to reach out to me direct. I'll be happy to run some numbers and show you what a home would cost for you to purchase today in the North Dallas, Texas area so that you can strategically plan on what's best for you, your family, and your money. And if you're a seller and you're thinking about selling, feel free to reach out to me and I'll be happy to run scenarios for you to show you what your home is worth, what you would roughly net, and how to get you to your next destination. Now, if you're just starting the process and you're thinking about looking at homes, you're thinking about selling your home, feel free to hit my website, troysage.com. It is not affiliated with Zillow or any other third party. It is not affiliated with any type of AI algorithm that's going to give you some pie in the sky ideas. It is in real time with the local multiple listing service, which is the most accurate information. And if you want to establish a game plan, which is my specialty, establishing game plans for each individual, because real estate is not cookie cutter. It's per person and it's per home. Then reach out to me or go to my website, troysage.com. Leave a comment below. I'll be happy to schedule some time with you. No obligation. Let's just talk about what you're looking to do and see if it's going to fit in what's happening in the market today. Also, if you want to stay current on everything real estate related and you want to help me support my business by getting the word out that I have no fluff information, no paid for stuff, straightforward facts, then click subscribe and the bell and you'll be alerted every time I upload another video. Feel free to share this with your friends, and here's some other videos that may be of interest to you.